QuickBooks Pro Plus Desktop 2022 OneNote presentation, set up inventory items. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 6300, set up inventory items. Also take a look at the immersive reader tool, topic introductions, also in the text area, same name, same number, but with transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic. Provide screenshots, links where applicable, accounting background to complement the presentations, and can be used to follow along with the presentations if you don't have access to the software at that time. Closing the icon on the left side. We're going through the inventory items, which will also be used for our purposes to add the beginning balances. The inventory items can be used to populate some of the forms on the home page here, including on the purchase side, the purchase order, the bills, on the sales side, the creation of the invoice, and the create sales receipt. They're going to be a very important tool. Here's our trial balance. We're looking at the inventory dollar amounts of the 2896, which we cannot just put in with a journal entry or an opening balance, but rather we need to be linking them to inventory items so the system not only knows the dollar amount, but also knows the inventory units behind them to create the subledger. We're going to be pulling this information from an Excel worksheet. So if you have this information in another accounting system that you're trying to transfer over, you would like to put it into some type of spreadsheet such as Excel and try to line up the headers to the data input formats as we will see shortly. We're now in the items area. So within the items area, we got the items drop down, rise up, new item up top. This is the new item. This is an inventory item as opposed to a service item if we were just to enter one at a time, which would take a lot longer. But you can see it's a more complex data input process with the cost side, the sales side, cost of goods sold account, the preferred vendor, the income account, and then the inventory account and the amount on hand, which would only be used when we first put the information in, generally when we start the company file and have beginning balances in the inventory. We're now going to go to the multiple uses or entering multiple items at a time, which would be in the item drop down, rise up, edit multiple items, or add, edit multiple items. And we're going to be looking at the inventory items as opposed to the service items. So in the drop down, we're looking at the inventory items here. We're going to try to line up this top column then, well, now looks like this, the top column of inventory items to line up to our Excel worksheet as best we can so that we can do our same copy and pasting, that being the fastest way to get this information into the system. Within our Excel worksheet, we've got the item name. We've got the sales description, which is going to show up on invoices, and the sales receipt purchase descriptions showing up on the purchase order and the bills, the cost, what we pay for them, the sales price, what we assume we're going to sell them for or what we will sell them for, cost of goods sold, the account that will be impacted when we sell them, expense account related to us selling the item, income account, the sales account, revenue account. The cost is going to be, this is duplicated, and then the asset account is going to be just inventory, the quantity on hand. This is how much we actually have as of the beginning point. And then the sales tax is going to be on. These are going to be taxable items as of date. This is going to be as of the end of the last period so that we can roll them into the current period, which is where we're going to start our new items in the new system, which will be January 1st, 2022. Now note that the items on hand here times the cost, not the sales price, will represent the inventory that is on hand. So if I was to take this 400 times 1, the 480 times the 1, and then add up all those items, it would tie out then to what is on our trial balance up here at the 2896. So that when we enter these inventory items, it should populate then our inventory amount as well as the inventory items themselves. Then we're going to be customizing this report for the headers, doing our best to line up the columns here by adding them, removing them, moving them up, moving them down, and so on, so that we then have our columns lined up top in such a way that we can just simply copy and paste from the Excel worksheet, copy, to our sheet here. And so we've got the item name, the sales description, the purchase description, the cost, the sales price, cost of goods, cost account, income account, and so on. Now we got the sales price, cost account, income account, asset account, quantity on hand, tax code. So it all looks good. We're going to save it and close it. Now we've got these inventory items as well as the service items in our system, and we're ready to start billing people and whatnot for it. And we should also have the beginning balances in the system for inventory. If I go into one of these items and look at it, you can see now one at a time how the data input would look one at a time. This is an inventory part. This is an ELP, Epiphone Les Paul guitar. Its cost, $400, cost of goods sold, the account that will be hit on the expense side when we sell it. The sales price, $500. It's going to be taxable, meaning sales tax will be charged. It's going to be going to the income account when we sell it, meaning a revenue type of account on the income statement. Asset account will be inventory, meaning inventory will go up when we purchase and down when we make a sale. The reorder report, we didn't put one. The one represented the amount on hand. So the average cost, it's using a weighted average inventory system per unit, is the $400 as well. So the invoice, if we were to create an invoice, then we have all these options now to be selecting from. You can imagine our store here, our guitar shop. People bring up a guitar like an ELP or something like that, and it will be much easier or very easy for us to populate into our invoice system, even if the person doing so doesn't know how to set up the invoice or the journal entry behind the invoice. Here's what the invoice looks like. This now will record a complex transaction if we were to record it, even though the data input is very simple, meaning invoice means accounts receivable will go up by the 525, sales will go up by the 500, then the difference of the 25 sales tax, which is now being populated, we set that up in a prior presentation, will go to the sales tax payable, a liability account. We also know inventory will go down by an amount not on the invoice, but driven by the item, which I believe was $400 for this particular item, and the related cost of goods sold. The expense account related to us to consuming the inventory in this case, on a perpetual inventory system, will go up, and the net impact on net income will be the difference of this 500 increase on the sales price and the cost of goods sold, which I believe was 400, driven by the item. Now, if we were to enter a bill, notice the bill has an items section to it as opposed to just an expense section. We would not just be putting an expense, which would give us then just the inventory in terms of the account, but the item, which will give us both the item that we are purchasing in terms of units, as well as the cost of it, so it can increase the inventory account and the subledger broken out by units. If we then go to the balance sheet, there's our 2,896 in inventory, which we put in place not with a journal entry directly to that account, not by entering a beginning balance directly into that account either, but by entering the inventory items and telling it that we have units on hand that had a specific cost. If we double click on that, we could see there's entered with these inventory adjusted items. That's the form that they use to enter them. And the other side went to the opening balance. If I was to double click on that, here's the data input form. It doesn't take us back into like that data input screen, but this inventory adjustment form using the applicable form that would be normally used for like an inventory type of adjustment. That's how QuickBooks will typically work. If there's a form that applies to it, it will typically use that form by default. So then we have the inventory here at the 2,896. Where did the other side go? It went to some equity account, which it probably created an opening balance equity account, which is a made-up account. But if we enter everything else to the equity account as well, it will tie out. So QuickBooks put the money into this one. This one's correct. The other side went into equity. I don't care which equity account it went to because we'll fix it later. But if all the accounts do that, we enter everything properly, then it'll be easy for us to go back in and adjust the equity to whatever the format of the equity needs to be formatted in, meaning clean out the opening balance equity, put it into owner's equity for this type of industry since it's a sole proprietorship.